Welcome back to your daily crypto breakdown. Today is Sunday, May 17th, 2026, and the markets are serving up a masterclass in consolidation. If you've been tracking the charts today, you know we are dealing with a classic risk-off environment as traders fight to hold critical support levels over the weekend. In today's episode, we are diving deep into Bitcoin's battle to stay above 78,000, a major legislative milestone in Washington that has altcoins moving independently, and why the macro narrative is causing whales to tread lightly. If you want to stay ahead of the markets every single day, hit that subscribe button right now. Let's look at the charts. Let's start with the king. Bitcoin is currently trading right around $78,033, maintaining a dominant 58.2% market share. We are seeing a clear cooling off period following the pullback from our recent local high of 82,800. Looking at the 1-hour and 4-hour charts today, low volatility consolidation is the name of the game. Immediate support has formed tightly between 77,600 and 78,000. Intraday traders are watching the 77,400 zone like a hawk. If we lose that, we could see a quick flush down to test lower levels. On the upside, immediate resistance is sitting right between 79,000 and 79,500. The volume is relatively light today, which is typical for a Sunday, meaning the market is coiled. We need a decisive breakout past 79,000 with strong volume participation to kickstart a real push back toward the $80,000 psychological barrier. The biggest fundamental catalyst driving the broader market structure this weekend is coming straight out of Washington. The U.S. Senate Banking Committee just advanced the Digital Asset Market Clarity Act in a bipartisan 15-9 vote. This 309-page bill is an absolute milestone because it aims to finally draw a clear line in the sand regarding how digital assets are classified, addressing the years of regulatory ambiguity that kept big money on the sidelines. Portfolio managers are viewing this legislative progress as a massive long-term green flag. When rules become predictable, custody solutions improve and institutional capital unlocks. We are already seeing the effects of this on altcoins. XRP, for instance, has shown immense relative strength today, holding steady near its key support at $1.41 and outperforming Bitcoin's intraday dip. If Congress fully passes the Clarity Act in the coming weeks, expect this to be a massive volatility trigger across the board. So why isn't the market pumping on this regulatory news? It comes down to the macro picture. The overall fear and greed index is sitting deep in a cautious territory at 27, signaling widespread investor hesitation. Earlier this week, U.S. economic data dropped showing a sticky 6% surge in producer price inflation. This has revived fears that central banks will keep borrowing costs elevated for much longer, which triggered a substantial liquidation of leveraged long positions over the last 48 hours. Add in rising U.S. Treasury yields, climbing oil prices, and geopolitical tensions, and you get a textbook risk-off environment. On top of that, Bitcoin's correlation with the tech-heavy Nasdaq index has hit a 5-year high. We are seeing major whales temporarily unload portions of their supply to de-risk. However, institutional giants like VanEck are publicly calling this correction a long-term buying opportunity, holding firm on their hyper-bullish macro forecasts for the turn of the decade. The market is testing everyone's patience today, but as seasoned traders know, consolidation is where the real opportunities are built. Are you buying this dip below 80,000, or are you sitting on your hands until we clear resistance? Let me know your game plan in the comments down below. Make sure to smash the like button if you enjoyed this data-driven update, and share this video with your fellow traders. I'll see you right back here tomorrow with a fresh look at the order books.